Well, the Reserve Bank, as we've been reporting today, is expected to raise interest rates this afternoon in a bid to tackle soaring levels of inflation. Joining us live now is independent economist Saul Eslake. Saul, always appreciate your time. Thank you. Are you in the 50 basis point rise camp today? Would that be a logical move in your view?
I think it is, and it's what the financial markets are expecting. So the Reserve Bank, which I think is on a path to raise the cash rate to 2.5% by the end of the year. That's a level that it thinks is neutral, that is neither stimulating economic growth, as it has been since the onset of COVID, nor restraining economic growth, but rather one which will allow the Reserve Bank to say that monetary policy settings are appropriate for an economy which is at pretty close to full employment and where inflation is above their target band. And then I think they will wait and see what the impact on the economy of what they will have done by then is, and whether the outlook for inflation in 2023 has improved as they currently expect it will.
And what do you expect, Saul, the impact of that rate will be? Are the majority of mortgage owners well placed to handle these hikes? Do we know how big a proportion of Australians will really suffer as a result?
Well, a significant proportion of mortgage holders, especially those who took their mortgages out before rates began to fall again in 2019, will be in a fairly good position to absorb rate increases, because most of them will have built up buffers against future rate rises by paying down their outstanding principal more quickly than their contracts require. And many of those households will also be among those who, in aggregate, have accumulated an additional $285 billion in bank deposits since February 2020. And they'll also, of course, have benefited from increases in the prices of the properties which they own. But there's a not insignificant cohort of borrowers who have taken out mortgages since interest rates reached their record lows, many of them believing the Reserve Bank's assurances that rates would remain at record lows until 2024. And some of those will be under pressure as interest rates rise, and they will need to economise in other areas of their lifestyles in order to cope with the increases in interest rates, especially given that they're also having to cope with increases in the price of food, petrol, and many other things that they buy on a regular basis and need to buy.
So more broadly, how strong is the Australian economy at the moment? There's a lot of talk about the R word, especially overseas in the US. How worried would you be for us here in Australia if America does dive into a recession?
Well, the Australian economy is certainly starting from a fairly strong point, with the lowest unemployment since the mid-1970s. And at least until recently, both the Reserve Bank and the government predicting that household spending would grow by 5% in real terms in the financial year that's just begun. Now, that forecast will, of course, need to be revised downwards, because interest rates are going to rise a lot more than had been assumed a few months ago, and household incomes will be eroded by bigger increases in the price of a broader range of items than had been foreshadowed a month ago, let alone 6 or 12 months ago. There's a lot of dwelling construction work in the pipeline. Businesses do seem to be more optimistic about investment prospects, and at least for the moment, many of Australia's exporters are doing well because of high commodity prices. That said, there's a significant risk of recession in Europe. There's a significant recession risk in the United States, which the US Federal Reserve is acknowledging could be a byproduct of increases in interest rates that they're undertaking in order to quell a more serious inflation problem than Australia has at the moment. And while Australia has been able to avoid being dragged into recession on the last two occasions that America has experienced one, that is at the time of the tech wreck in 2000 and during the global financial crisis. An important part of our ability to withstand US recessions on those earlier occasions was that China, our major trading partner, was performing very strongly and generating a lot of demand for Australian exports, that's unlikely to be the case in the next couple of years, even if it weren't for the difficulties we're now experiencing in our economic relationships with China. So while I don't at the moment think Australia's economy is going to fall into recession, I do think we're going to see a significant slowing in economic growth. We will probably see some increase in unemployment, though to a level that's still low by historical standards. And if the recessions in the US and Europe turn out to be severe, then the risk of us following suit just simply can't be ignored or dismissed.
Saul Eslake, always appreciate you joining us with your analysis and expertise. Thank you so much.
Thanks for having me, Ashley.